Adil, bringing you a review of the FTSE 100 from an intermarket analysis perspective. Okay, I've been away, namely busy. I felt ill, had some food poisoning, etc., and I've been busy with other things. But generally, it's summertime. Obviously, cricket season started as well. Play at Heaton Mersey Cricket Club in Cheshire, in the Cheshire League. So cricket season started. Obviously, I've got I'm into my marathons now as well. I've done 2 half marathons. I've got a full marathon in Liverpool on the 14th of June. So that'll be interesting. So I've got 7 weeks to train for that. So obviously summer season. Obviously trying to keep busy. It requires a lot of commitment, dedication to continuously make these videos. I'll certainly try my best at doing so. I have promised that I'll do updates during the day, etc. But when these markets are as volatile as they are, it does require a lot of focus, especially given the last 2 or 3 weeks. I mean, last week I just about scraped a positive, but the week before them were negative. So I had 2 or 3 weeks that were consistently negative. So which is very unlikely and very hard for me to obviously to swallow, given the fact that for almost 10 years now I've been nailing 200 plus points a week. So it certainly is hard when you have a losing month, or one of the first losing months, obviously, of the year, and or not only the year, or over the last few years. So given the fact that it was very hard to fathom what the bias was in the market at that very moment in time. Okay, so let's try and understand exactly what's happening, because there have been some wild swings, and today certainly has has seen a few as well. Okay, especially given the fact that I got whipsawed in the DAX twice today. Okay, so let's try and see exactly what's happening here, and let's try and interpret. The reason why I've actually reserved doing a video over the weekend is because of this very reason. Is everybody wants to interpret as to what's going to happen, or what is happening with regards to the FTSE 100 and the Asian markets, obviously, and the actual European markets as well. So there's a lot of variables to take into consideration here. So let's start one by one. Okay. Basically, we had the route started. The route started on a Friday. Okay, and the stock markets obviously sold off, given the fact that we had this news flow regards to Chinese deleveraging, okay, curbing the excessive amounts of leverage that are being obviously employed in order to gain access to the market, and the number of new trading accounts that are being opened, and so on and so forth. Okay, so that's certainly a factor. Okay, then you have the situation where they've increased the exposure in terms of short selling as well. And there are obviously concerns with regards to the potential bubble in the equity markets, given the stellar run that we've seen. Now, if I just bring up a chart of the Shanghai, I mean, this can certainly be seen via that. So bear with me. I can bring up a chart of the Shanghai, and that will certainly display that. Okay, so here we go. So if I bring up a monthly chart of the Shanghai, and as you can see here, we're coming into double top resistance on the Shanghai index. So that indicates to me, or that is informing me, that the Shanghai certainly has moved up quite stellar. And given the fact that obviously we've had a few negative days and reversal days, given the fact that on Friday we sold off quite substantially on the futures market, and that obviously caused the US market to sell off quite hard, and vice versa, and so on and so forth. So basically, the European markets obviously got hit hard. Okay, we had the German DAX fall as low as 11,630 until we bounced right back on a Monday over the news of a Chinese rate cut. Okay, and that sent the German DAX right back up to up and above the 12,000 level almost. And the run has certainly continued today. Now, that certainly has been reversed, given the fact that the weaker German data that came out today, and also the Greece situation as well. Okay, so that's the situation that we find ourselves in. We have increased, obviously, focus in terms of leverage, or concerns regarding leverage in China, which has caused a risk-off scenario, increased exposure of short sellers, or increased abundance of short sellers in the market, which generally means that you can correct. The market is due for a correction, etc., etc. And that obviously has caused concern, and the markets have sold off hence thereafter. So that's negative. Okay, so that's one negative factor, but then that's been neutralized by the Chinese rate cut over the weekend. But yet on Monday when we woke up, the Asian markets didn't react as positively as everybody would think. They did stem the flow of, or stem the sell-off in Europe, but still the markets reacted negatively. So that didn't follow through into Europe, even with the Greece contagion risk and the negative headlines that are coming out of Greece now, and the possibility or the probability of them kicking the can down the road, and so on and so forth. The situation certainly isn't there either, so that's not causing the real risk off scenario either. So you've got the situation with regards to China, a potential double top scenario, like I've stated, with obviously deleveraging and so on and so forth, and the slowdown in China and so on and so forth. So is the Chinese rate cut that was done over the weekend, which with it being a 100 basis cut, is that interpreted as being negative for the stock market or negative for global equities, given the fact that the slowdown is much sharper than everybody expected? So that certainly is another situation or another scenario that we need to consider as well. Okay, so that's why I've waited and tried to interpret as to which way this market wants to go and how the market wants to move. Now, so far today, we've had the Asian markets up quite stellar. Okay, we've had the Nikkei up by 1.4%, the Shanghai Composite up by 1.8%, the Hang Seng up almost 800 points again, up at 2.3%. So the Asian markets at the moment, even though they have stalled, okay, they have stalled, they're not moving as high as before. They have stalled, and obviously that's mainly because they've got the actual interest rate cut fillet. Okay, so that's certainly preventing the markets from selling off there. Okay, but the deleveraging concerns remain in the background, and given the fact that we are coming into double top on the Shanghai index, that may well be a top in the European markets as well. Okay, and that's certainly something to consider going forward. Okay, especially given the fact that the European markets are trading inverse to the Euro USD, and the Euro USD has not made a lower low. We've had Draghi talk about the warning, or the, what's the word to use here? Basically, he's attempting to scare off the bears on the euro. So in other words, he's trying to talk up the euro. Okay, by giving the bears something to think about and chew on. Okay, in other words, he's trying to talk up the euro, which means the euro is going to go higher. If the euro goes higher, then EU equities or European equities are going to go lower. Full stop. Okay. Now, the euro has failed to make a new low, therefore, and obviously European markets have failed to make a new high. Okay, so therefore one would assume from that perspective that we are looking at a potential top in European equities if the Shanghai double top holds. Obviously, if we go past the Shanghai index double top, then obviously that scenario, that theory is out of the equation, and then we're back to square one. Okay, in terms of making new highs in this market. Now, another index that we should certainly keep an eye out for as well is the Nikkei. Again, this is into its resistance, a potential double top scenario as well. So it's currently trading at 19,009, well, almost 20,000, and it really is struggling to really break up and above the 20,000 with real conviction. Okay, so again, that's a potential scenario that we're looking for in terms of obviously putting in a top and looking for a potential reversal there as well, especially with the Greek contagion and no real resolution with Greece in the background. We've had a weaker economic data out of Germany today, or was it certainly being interpreted as being negative. We've had weaker real wages out of the UK on Friday. The whole rally that's obviously that occurred was basically on light volume in Easter. So again, this whole notion of this euro drop led rally is certainly being questioned. Okay, especially given the fact that the euro has failed, or is no longer making lower lows. Obviously, we all know with regards to a stronger dollar and the impact that it's having on earnings, and whether or not these earnings are going to be interpreted as being bullish or bearish. Okay, again, has the Chinese rate cut been interpreted as being bullish? Not really. Okay, so again, that certainly is a concern as well. So if we bring up the S&P 500, we can also bring up the Wiltshire as well. But if you bring up the Wiltshire 5000, for example, let's bring up a daily chart. again the US markets are stumbling. I mean, we're holding this resistance level, we're failing to, it's an inside bar thus far, and we're holding that resistance, we're failing to break and move higher concisively. So again, a lot of questions that are being asked, with regards to this market right now. Okay, so if I go back to the FTSE 100 now, and let's try and interpret the events thus far. Okay, so again, in order for a top on the FTSE 100 to occur, the election uncertainty wildcard certainly needs to come into the equation, which it will, given the fact that not just the geopolitics, but the socio-economic concerns that will weigh on the FTSE. So obviously the fact that the uncertainty regarding the election, obviously that will weigh on the FTSE, so therefore one would not like to be purchasing the FTSE at these lofty heights, given the scenario and situation there. Also, the other factor at play here is obviously the stronger dollar, given the fact that the rate hike and the hawkish comments that are coming out of the Fed members. Okay, that's obviously not positive for commodities, nor is it positive for the FTSE 100. Then we have the scenario, the situation with regards to China, and it's slowing down. So that obviously isn't positive for given the fact that it wants to move towards a domestic orientated economy as opposed to an infrastructure and investment spending economy, which obviously again means less demand for the metals and commodities. And as we know, oil certainly has stumbled, copper has stumbled, gold has stumbled, so iron ore has stumbled. So all these commodities are certainly coming into resistance. Therefore, one would presume that the FTSE would certainly hold its resistance and would fail to be unable to propel itself higher. Okay, so again, that's certainly a scenario. Okay, and then obviously we have the Brexit situation. That's certainly a scenario. We have a situation in Yemen as well. We have the Americans intercepting a potential arms going into Yemen or overnight. Again, that situation, that scenario could certainly heat up at any time. So there are a lot of geopolitical and socio-economic headwinds that are against the FTSE 100 at this very juncture. Okay, at this very juncture, namely being the stronger dollar, obviously hurting commodities, Chinese rate cut failing to push commodities higher, Chinese growth hurting commodities, the Aussie and Kiwi coming under pressure, etc., etc. So these are all factors, from my perspective, that certainly are going against the FTSE 100. What's going for the FTSE 100? QE, okay, QE from Europe, excess stimulus from China. That's the only thing that's really going to propel this market higher. Light volume flow up, etc., etc. So these are all the factors or potential reasons that the market can go higher. But from my perspective, it's very hard for me to envisage that at this very juncture. Okay, so that's the headwinds that we have. Okay, with regards to the FTSE, I mean, we can bring up a chart of oil, for example, and certainly show you from that perspective. So if I just bring up a chart of, I mean, even copper as well. I mean, you can certainly look for, I see copper. We did try to push higher ever since the Chinese rate cut has failed to send copper higher. It generally means that that rate cut is really not aimed at individuals that are going to be investing in infrastructure or any type of investment project, etc. It's more towards obviously helping the local or domestic individual or domestic consumer, and it wants to become a consumer-led economy as opposed to a infrastructure and investment-led economy, which obviously doesn't suit the FTSE 100. Okay, and obviously you can certainly see that being displayed in the chart of copper. So again, that's certainly a factor at play as well. Okay, so that's something that certainly needs to be understood and certainly needs to be respected as well. Okay, so the chart of oil. So if I bring up a chart of oil again, so we've been struggling ever since we've pushed higher into this region here around the $58 region. The oil price certainly has been struggling. So if I bring up a 4-hour chart, again, it's certainly putting in topping tails, and it's on the verge of potentially moving lower. So this isn't exactly bullish. So from my perspective, let me just get rid of this, not sure what this is here for. Okay, so again, we have this key trend line on the price chart of oil. So it's something that we're going to be observing. Okay, if the market does obviously come back and test it, but right at this very juncture, certainly oil chart is not looking very bullish. Therefore, that one would presume, especially given the fact that I can now spot a potential HNS formation as well on oil. If that's the case, then that generally indicates a potential top in the FTSE 100 as well. So as you can see here, there's the head that's been put in, and this right shoulder, and obviously down we go. So that certainly isn't a good sign, okay, with regards to the oil price. So the FTSE 100 certainly is under a lot of pressure at this juncture. That's my interpretation. Okay, and certainly will come into the limelight and into focus, especially when the Greece situation hots up. Okay, especially with regards to the L area in Greece can't default and stay in Eurozone. So again, there's a lot of debate with regards to Greece defaulting, etc. And that will all be negative for commodities, and that will put pressure on commodities on the downside, which in turn obviously affects the FTSE 100, as we all know. Okay, so these are all factors that we have to observe and watch very, very carefully, and especially with regards to their movements. Okay. Right, so let's try and discuss the FTSE 100 now, given the fact that the economic data today, the summary of today, trying to bring everything into perspective. We had the ZEW, and the sentiment is a number that came out bearish, and that obviously put a negative slant on Germany, and that's why German DAX is certainly under pressure today. The economic sentiment did come out better than expected though, but the current situation came out slightly better than expected, and the April number. So ZEW European number that came out stronger, but the German number came out weaker, and that obviously put pressure on the rest of European indices. Plus, obviously, Greece uncertainty and potential talk of default there as well. Okay, so that's really the only economic data that we had. We did have US data that come out in terms of Red Book. The Red Book, both numbers came out worse than expected, so again put further pressure on the actual European and US markets. At this very moment in time, the Nasdaq is the index to watch. Keep observing the Nasdaq. And that certainly is showing resistance and a potential reversal. Certainly, from my perspective, is certainly overdue on the Nasdaq, and certainly could occur at any time. And that certainly needs to be watched carefully. Okay, right. So let's look at the FTSE 100 now, and let's try and interpret exactly what's happening with regards to the FTSE. Before I do that, just quickly bring up the chart of the S&P 500, because it's always worth looking at things in perspective. Now, in order for me to be bearish in the FTSE 100, the S&P has to be more or less has to have the same type of pattern or same type of argument. And as you can see, daily chart resistance, okay, diagonal trendline resistance. Therefore, that supports my thesis that the FTSE 100 will be bearish before I even attempt to show you. Okay, we've got a topping tail on a 60-minute chart. Again, it supports my thesis that the FTSE 100 will be bearish, and we're looking for a potential reversal on the downside quite powerfully. The 10-minute chart, again, we have this H&S type formation here. Okay, so the 10-minute chart obviously is testing that. This is your left shoulder, obviously the top is in there, your right shoulder, and obviously down we go. Either way, we're making lower lows, lower highs, and we've obviously closed this gap. Ever since we closed that gap, the market certainly has been very, very weak. Okay, this is the lower high again, looking for a lower low. We have an unfailed gap below. The inverted head and shoulders target's been hit, therefore the short squeeze is over. Now the H&S needs to play out. Okay, like I said, because the Shanghai index is now into resistance, the Nikkei obviously into resistance. So again, both of them into resistance generally indicates Asian markets into resistance, and obviously the actual European and US markets are into resistance as well. This is using intermarket analysis. Now, if I bring up the chart, the FTSE 100 daily chart, like I stated, is bearish. The doji candle was put in today. We rejected the highs. Okay, 60-minute chart of the FTSE 100. Let's observe this. Okay, 60-minute chart. We're holding these resistance zones here. The resistance zone is at 7086 to 7095, and obviously if you do push high, you're looking at 7120 above, more like a stop loss hunt. Either way, that's the resistance zone that must be respected. Okay, 10-minute chart of the FTSE 100. We have inverted head and shoulders that obviously has been triggered. Obviously I took a short here with subscribers from 7081, so average around 7083. So obviously the market sold off, closed my position, and now looking for a potential. If there is an opportunity, I will certainly take a re-enter short. I am already swing short the FTSE 100 on my swing trading service. So those of you that are already on that, it is a free service. You just need to email me your mobile number, and I'll add you to the WhatsApp service with regards to that. So 10-minute chart certainly is resistance at 7084, and then you have all these multiple resistance zones from up to 7100, which certainly from my perspective are looking to potentially hold. You do have an argument here with regards to a H&S formation, so observe this very, very carefully. This is your left shoulder, then you have your head formation here, then you have the right shoulder that's forming here. We did hold the resistance zone, so if we take the pivot high, take it to the neckline. We held a 75% resistance, which is exactly at 7086. So again, this is another bearish pattern on the FTSE 100, therefore looking for potential downside, testing this 6988 level. Okay, so again, there is news out now with regards to the Chinese PBOC, triple R cut, not shift in monetary policy. Okay, so that isn't exactly positive, is it, folks? Okay, so if that's not a shift in monetary policy, okay, bear with me 1 second. Bearish, hawkish, okay, for FTSE 100. So I'm just updating this on my Twitter feed right now. So the PBOC, triple R cut, not shift in monetary policy, Xinhuan via BBG. So that's interpreted as being hawkish, folks, and that's bearish for the FTSE 100. So basically what that's telling you, okay, and this is interesting because I'm doing live analysis on the FTSE 100 and I'll give you my opinion as well with regards to the market. What that basically means is, and this is something that I am going to be setting or organizing as well, is a fundamental analysis, a mentoring program, so that it gives you the ability to interpret news flow and in terms of fundamentals, from a fundamental perspective, and obviously accumulate that or organize that with technical analysis in order to ascertain which way the market's going to go and give you more conviction in your trading as well. Okay, so what that basically means is that everybody is interpreting the Chinese triple R cut as more rate cuts to come. So there's a shift in the bias or the thought process of China. Okay, therefore everybody wants to buy and hop on board, and the whole rally in the markets has been, or the Asian or the Shanghai index has been, on the fact that everybody wants to front run Chinese monetary policy. Okay, that's the thought process. Now all of a sudden, okay, we've had the deleveraging. So China certainly is concerned with regards to the bubble, individuals leveraging, etc. They're trying to cool the housing market, and then obviously they're creating a bubble in the equities market. So, and this can have obviously negative effects globally, okay, especially with regards to the Europeans overcoming their credit crunch and so on and so forth. And you want a stable market, okay. So, especially given the fact that Chinese are trying to focus more on domestic, the domestic economy as opposed to export-led economy, and want calm, collective growth. Okay, not too fast, not too hot, a Goldilocks scenario. Okay, so this then is interpreted as being hawkish. Hawkish generally means a rise in rates or a potential rise in the interest rate, so a rate hike, similar to the FOMC. Hawkish generally is equal to bearish and is negative for the stock market. So in other words, they are not as dovish as we all expected. Therefore that would be interpreted as hawkish, and hawkish is negative for the stock market, therefore is negative for equities, and the stock market sell off. The dollar should catch a bid, the Aussie and Kiwi should sell off, and the FTSE 100 should sell off, and sell off will ensue there. Therefore this right shoulder on the FTSE 100 will certainly play out now, and we go and test the 7030 level. Okay folks, I'm going to send out a message to my subscribers on the live analysis service. I'm going to open up a short. I'm looking for 7030, potentially 6980 below. As you already know, I'm already swing short on the FTSE 100. I'm off to cricket practice now, and so risk on, risk off, wax on, wax off. Goodbye now.